Good morning. My name is Phillip and I want to talk to you today about the printing of money, quantitative easing, and the bailouts round 2, which is called QE2, Quantitative Easing 2, the printing of money round 2. In America, I do not think my own country will conduct a second round of bailouts. The first one was way too expensive for us and may prove in the future to be extremely difficult to pay back. After 200 years of fractional banking, the mystery of banking, the secret that of banking that many people tumble over with joy if they sense that they could become bankers and make money at it, or tumble over with a kind of secret relish if they're conspiracy theory people, and they sort of, oh yes, see, this is the naughty, dirty, dark secret of banking, whereby if people deposit money with a bank, the bank has discovered over history through experience that they could issue 7 to 8, 10 times the amount they hold to others. So they could literally at the stroke of a pen create money. But this is not printing money. This is a kind of risk factor. It was in the normal course of events, regular banking. It's unlikely that only 10% or 12% or so, 15% of people will come for their money, and sort of overlap with each other. So, any kind of overlapping or small run on a bank is unlikely in the short term, and probably the medium term and even the long term. It's fairly rare. So you could safely issue 7 or 8 or 9 or 10 times what depositors left with the bank. They could issue it as letters of credit or credit notes or promissory notes, or as currency, regular currency. And this is what most currency today is. And that's what it mostly ever was, even when it was supposedly backed by gold or specie of some kind, silver or bullion or some government declared value. Now, money issued in a country must bear some relation to the underlying goods and services and productivity and the exports of that country, as we see today, where the Chinese dollar is rising in prestige and value because the exports of the Chinese economy are basically back. Money isn't currency. The issuance of currency today is not so much backed by gold or bullion or specie, but by the performance of one's economy. However, the long run history of democracy and capitalist economies based around individual and private ownership and so on do not last out through the millennia, do not last out through the centuries. The longest run you could expect a democracy or capitalist democracy system to run would be 200 years or so, and we're coming to the end of that or so period with America, where after 200 years of federalist long-term fractional banking at this 10 to 1 ratio, roughly 10 to 1, 7 to 1 ratio. You see now one of the first major steps into the printing of money. Marxists and socialist people think that money is created at the stroke of a pen, and some monies can be, to some extent, credit and so on, can be, but nevertheless the value of that credit, the value of the currency in which it is denominated, must bear some relationship to the underlying support of it, even if it's just a perception. And if it is perception, it's probably related to the prestige of the country. It's probably heavily related to the prestige of its military forces on the battlefield. Their success or failure can collapse an economy. And the forces of the American military machine are extended pretty well to the max. All it would take would be a major failure on the battlefield, or some way of successfully defeating an American battle group at sea, possibly undetectable underwater missile made of ceramic or some undetectable plastic or something. If that kind of thing, whatever it is, would be discovered by hostile forces hostile to America, and a battle group was defeated, the shock on the American economy and currency would be very great. I don't think that is going to happen before the purely monetary and financial shocks, the economic shocks and the currency shocks that they're bringing about themselves through the printing of money. And my contention is, after 200 years of fractional banking at 10 to 1 in their favour, you now have a situation with QE1, or quantitative easing bailout round 1, where the maximum amount of money appears to be about $7 trillion pumped into the American economy, the car makers, the homeowners, the mortgages and the banks and the finance houses and so on, about $7 trillion. Now keep in mind that America itself, the entirety of the United States, every lock, stock, barrel and bit of it is only worth $50 trillion. Yet the derivatives market, the money on money, the play money, the monopoly money, the paper entry, digital money that is circulating per annum, I think it's per annum, is $63 trillion. This is more than the United States is worth. However, the derivatives market is a worldwide market. And there's another fact too, is that 2 out of every 3 United States physical dollars or digital dollars are circulating without ever coming home to the United States in the main, outside of the continental United States. Some countries accept United States dollars as currency for circulation within their own country. They're like in Burma, Myanmar, or Thailand, or Malaysia, or Singapore. You can, almost everybody appears to know the current and daily exchange rate. However, it is coming down, and one of the reasons was because of that bailout. That's had a big impact in the reduction in prestige and value of United States currency. $7 trillion. Now my contention is that the ratio now works in reverse to get the same effect as the first bailout, QE1, where now into the beginning of QE2, will there be a QE3? Well, listen to this. QE2, to be effective, and I doubt if it will be sufficiently effective, they may have to top QE2 up itself, because to have the same effect, my contention is they will have to have 10 times the amount. That's $7 trillion. They will now have to have $70 trillion pumped into the American economy as bailouts and, government guarantees and so on and so forth, to have the same effect as QE1. Now, QE1 wasn't called QE1, but the first bailout round. And at this rate, bailout 1 and bailout 2, happening, quite rapidly fast on the heels of the first one, and at an ever-increasing rate, I think you will see in 18 months' time the United States dollar worth about 50 cents from what it is today within the United States in terms of its purchasing power. 18 months' time, if they go to $70 trillion, and they may need to. That's the contention, based on my understanding of the axioms of population economics, and there is no free lunch, and the downside of 200 years of fractional banking 10 to 1 advantage is a 10 to 1 disadvantage when it comes to quantitative easing and the printing of money. Printing of money is the downside to fractional banking. Eventually you will print money, because credit creates its own delusion. The issuance of credit based on an appearance of wealth, the prestige of wealth, unless there's a direct one-to-one ratio, must inevitably flip over to the ferocious demands of printing money and quantitative easing. So $70 trillion, well, the next round, QE3, would be then $700 trillion. And you are then getting, obviously, into a United States dollar worth 10 cents or something, 5 cents. And you're getting straight into, you're stepping rapidly, running, diving into Mugabe territory, Weimar Republic. And we will see that. So I give them, at the most, and this is hopeful, 200 weeks. After 200 years of fractional banking, the downside will kick in with an accelerating exponential curve upwards in the requirements for the printing, and downwards in terms of the value returned for your dollar. The purchasing power of that United States dollar will plummet like a rock into the sea. And I give them 200 weeks to do that. That's about 4 years at the outside. The American dollar, and by the end of that time, will be virtually worthless. So my dear friends, my dear American friends, you will need it this time. God bless you. Pray to God that you yourself will be saved. You have brought it on your own head. And I believe that your troops overseas will walk home, that they will sell their tanks, they will sell themselves and plead for their lives as they progress back to a fallen country. And nobody but nobody will want them. That is my prophecy. Today is November 2010 in New Zealand. My name is Phillip O'Sullivan. 4 years at the outside